Business Analytics chapter. The Business Analytics chapter has always been organizing, inviting people from different industries to actually cover how they have been using data analytics in their respective space. We are actually very excited today that we are actually organizing our very first idea session that is related to the crypto or digital assets space. So the idea session that you're going to actually attend now is the cryptocurrency and digital assets using data analytics. We have two speakers that we invited. Before begin, let me invite Chin Lok to actually give us a welcome speech. Chin Lok, please.
Oh, thank you, Christopher. Right. On behalf of Manik, who is the president of the SCSBA chapter, so I'm just extending a very warm welcome to everyone who has taken time to attend this ideas seminar, and also especially to our speakers as well, John as well as Eugene. Of course, cryptocurrency has been generating so much interest nowadays. I'm looking forward to hearing from the speakers and perhaps get some enlightenment to what is happening in the marketplace, right? So as Christopher mentioned, Ideas has been organized by BA chapter since its founding, and it has been strongly supported by IMDA. Apart from today's one, there will also be sessions we plan to organize in June, August, and October as well. So do look out for our EDM and our announcements over email. Thank you very much, and looking forward to your Q&A sessions later on. Yeah, thank you.
Thank you, Chin Lok. Very quickly, I'll now just run through the agenda. We will be inviting our first speaker, Mr. John Okoro. Subsequently, the second speaker is Mr. Eugene. And then the Q&A segment will be actually done at the last particular segment. You can actually pose your questions via Zoom, right, along the whole session, and then after which I will be facilitating to look at those questions and invite the respective speakers to kind of answers to those questions. I would like to remind you that this particular session will be recorded, right? So and after the whole session, we will be posting it in our SCS website, and then you can kind of view it subsequently as well. So without further delay, let me first give an introduction to our first speaker, Mr. John Okoro. He is the director and CEO of Auspicious Agile and Blockchain. Right, very interesting name. He said that the name was selected because he has been in Asia for quite some time, right? So the word auspicious is a good name to have, right? So he's a blockchain enthusiasts and investors, founder of African diaspora-focused Singapore blockchain meetup. He is a serial technology entrepreneur for global companies and startups, and is the creator of Auspicious Agile and Blockchain expert blogs, Agile training, conference speakers, InfoQ, and he's the author of an ebook called A Guide to Distributed Agile Framework. Right, he has been 13 plus years using Agile and related methods, and including Scrum, Kanban, and so forth. And somehow you can see this like more DevOps related, but somehow I think he has a deep passion into the cryptocurrency and digital space. Henceforth, we have invited him here today to actually share with us. He has a Bachelor of Science in Computer Science, University of California, a Master's in Business Administration, UCLA, a Juris Doctorate with Southwestern Law School. So he speaks Spanish and some basic Mandarin. So with that introduction, let me quickly hand over now to John to actually share with us the topic today.
All right, thank
John,
you.
please.
Appreciate it. I'm going to go ahead and share my screen, so let's make sure that everybody can see it properly. Go into presentation mode here. Okay, I think all my background apps are hopefully out of the way, so they won't disturb us. Can everybody see my screen okay?
Looks good, John.
Okay, great. Let's get into it. Okay, so disclaimer, not financial advice, just my opinion here. Okay, we've already got my background. We don't need to go through it again. So we're going to go through the introduction to the economics of the blockchain tech. We'll talk about some of the potential for African developing markets because there's two different use cases here. And then we'll do a QA, I think, at the closing later. Okay, so introduction and the economics of blockchain tech, right? So the dot-com boom, for those of you who remember it, it started both, it kind of parallels what we're seeing now with blockchain, right? That was back in around 2000 or late 99, 2000, right? Both started with a number of projects and companies. Nobody really understood the economic value of a lot of them. Many of the initial projects and companies failed, right? Like we saw the ICO boom a few years ago, back in 2017, 2018. But the dot-com boom also produced Google, Facebook, Amazon, et cetera, right? The FANGs, and some of the most valuable companies now in the world. There are also some differences we're seeing though. The dot-com boom was centered in Silicon Valley, right? The blockchain and cryptocurrency is global. So you're going to see in Asia, Africa, China, India, you name it, you're seeing players coming up in the into the blockchain space, not only in the US or Silicon Valley. Dot-com investment was primarily limited to venture capitalists, institutional credit investors. On the other side of it, blockchain ICO investment, of course, now we have exchange traded, we have exchange offerings, we keep the name on these. So we have a lot, investment is open to pretty much anybody in these types of projects on the blockchain. So it's global and it's very democratized and open. This is the market, which constantly changes. I think I took a snapshot this morning or last night, Singapore time. So we're sitting a little under $55,000 for Bitcoin. Just to give you a picture of what that is, about 2 years ago, we were sitting about $3,000 after things dropped off after 2017. So a very large increase here. Ethereum is about 2,600. Binance Coin is third at $552. I won't go through all of these, but you can go to CoinGecko or CoinMarketCap and you can take a look at all the different projects. The ones that are usually most interesting to people, who are especially those who are new, is probably the top 10 to 20 coins or tokens. So where are we going? It's very likely what we're going to see is the next Google, the next FANGs basically, come from this blockchain space. We have, I think, Gemini coming to speak to us next. So we've got Coinbase, we've got Binance, we've got a lot of these players who are probably going to really be the next big names as it develops. We'll probably see some more, grown from, Africa, developing world, et cetera. In addition to that, it's likely blockchain and cryptocurrency will become the money of the internet, kind of the I guess, lingua franca, the money of our transactions on the internet. So that is something we also see happening. Now, it's a big deal for the developed world. If there's another Great Recession, a lot of people are very edgy about where the markets are going in 2021, right? As we deal with the pandemic and hopefully post-pandemic world. And there's a good chance blockchain and cryptocurrency may become dominant in the world because we know there's a lot of the devaluing of the US dollar right now. There's a challenge from the Chinese yuan, digital yuan, which is a digital currency, even though it's closed to China, but still it is a digital currency, I believe blockchain based. Regulation is a challenge in understanding each country. So if we look at Turkey, they did a quote ban, Nigeria did a ban and walked it back. The US has pretty much embraced blockchain. China, they have half of the mining for Bitcoin in the world. So there's a lot of shifting in that kind of regulatory space. And with COVID, like we said, the move to digital assets and cryptocurrency is accelerating. It's accelerating really fast, right? And then also we can see that we have a stock market 2.0. I believe Binance is now offering stock by Tesla. I think soon Apple, Microsoft, a few others tokenize. I think iStocks here in Singapore does similar tokenized offerings of different equities. And then you'll see a lot of companies, JP Morgan, Goldman Sachs, NYC, NASDAQ. We have MasterCard, Visa, Square, you name it, right? There's pretty much every company and player either is getting in, or has gotten in and has not told you yet that they've gotten in to the market. In addition, all banks in the US are authorized to custody digital assets as well. So big deal there, because that means basically across the US that there's full authorization from the OCC, Office of the Comptroller of the Currency. Okay, digital yuan and the digital dollar. So cryptocurrency matters. We can see here, this is our previous president, of course. So the US and China have kind of been making moves in this space. China has issued their digital yuan. The US has kind of been going more with the open currencies, the Bitcoin, the Ethereum, and integrating that into the existing financial system at the moment. There is talk of a digital dollar from our Congress, but doesn't seem like that's going to be anything immediate. We've also heard from Europe that they're talking about central bank digital currency, but the last I heard, that's about 5 years out. So those are definitely not immediately on the horizon. China's a little bit ahead on that. Now, the rise of Bitcoin, a lot of people talk about, well, you know what, this is so up and down, up and down, up and down. You know, look at how this market is so volatile, right? But if we look at it and we put a trend line on this, and you guys are data analytics guys, you know, you're better at this than I am, right? If you put a trend line across this, we can see there's really only one trend that's taking place here. This went from like $1 10 years ago, less than $1. You can see down here, it was 10,000 Bitcoins that was used to purchase a single pizza back then, okay? So that was one expensive pizza today at a $55,000 Bitcoin, okay? But back then, 10,000 Bitcoin for a single pizza, kind of as a proof of concept that you could use it for payments, right? And now what you're seeing is this trend is just straight up, right? And we can see again as it continues. I haven't updated this chart, but I showed you, I think we're seeing around 54, 55,000 currently in terms of pricing. There is a cap on the amount of Bitcoin that can be mined in the algorithm, in the code. So you can only have 21 million Bitcoin ever. I think you'll see it here. So 18 million something are in circulation. This is a few weeks ago. And there's 21 million that we can ever have. That makes it valuable because of the scarcity as well. So you can see everybody is jumping into this thing, right? JP Morgan, you got, you know, it's happening in Africa, which my company deals with. The NYSE, Fidelity, we talked about Tesla, Microsoft, and, you know, NBA. They're talking about the Dogecoin, and you name it, Bitcoin, PayPal, Visa, MasterCard, Square. Everybody is coming into this space. So Bitcoin, why is it rising? Well, it allows anyone anywhere to transfer wealth, right? I'll give a quick story. My father, unfortunately, was ill a couple of years ago in America, and I have family in Africa. I actually transfer money from Africa to the US, which is opposite of what a lot of people do. But the banking, it was so hard for me to get money for his medical care. I had to answer a bunch of questions, do a lot of forms, keep on going back to the banks. And finally, I just sent my sister, who's in the US, I sent her some Bitcoin, right? That took me 10 minutes. So you can send money from anyone, anywhere. If you don't know a lot about kind of those use cases, I would take a look at Andreas Antonopoulos, The Internet of Money, great book series, great way to learn about this, okay? There's a limited supply. Once the supply is minted, 21 million, no more. So we got scarcity. There is, right, no intermediaries between the people and the money. I can send something to Christopher right now. I can send something to whoever I want immediately. It's stateless, meaning that it's not owned by any one country or company. So I can send it across borders. That's not an issue. And of course, it is decentralized and trustless, which means the opposite of what you might think. It means basically, I don't have to trust any one person, right? Now, institutional adoption of Bitcoin. So we can see here, we got, like we talked about, the stable coins being adopted by US, green light on that for banks in the US, right? And here in Singapore, we got DBS, who is doing the exchange for Bitcoin, cryptocurrencies, digital assets, et cetera. Canada has ETFs that have been approved. Brazil has ETFs that have been approved. In the US, we've been talking about it, right? So lots going on there. Now, this is very interesting, especially for those of you here on the data and analytics side. Bitcoin stock to flow. This is by Digitalk, Plan B, very famous. Basically, what they did is a stock to flow analysis, and this compares, like for gold, there's a stock to flow, it's like 64, right? It says compares how much gold can you get out of the ground every year compared to the total supply. And then that gives you kind of a scarcity and what the price should be. They did the same thing for Bitcoin. Now, Bitcoin halves, it has a halving every 4 years. And so every time it halves, you get less supply, you can quote mine, okay? So what this shows, it's been very accurate since 2010. It shows what the price of Bitcoin should be. Now, what's very interesting is this. If you look at the price right now, in about 2021, it's indicating that Bitcoin should hit 6 figures, which is what we're hearing from a lot of people. And if you look further into the middle of the 2020s, we're seeing that Bitcoin should probably be sitting over $1 million, okay? So now, obviously, can't make the price prediction, can't say for sure. You can go check this out at Plan B, the Bitcoin stock to flow model. I think a lot of you in the data space will be very interested in this, but so far, this has been very, very eerily accurate, okay? So take that for what it's worth. So we can see Bitcoin is up over roughly 700%, depending on what price point we look at right now, in the past year, and up over 1,100%, right? The next is March of 2020, the price low that we had there. So this is probably the best performing asset in the last decade, as far as I'm aware. And we can see here the performance of some of the other tokens. So there's not only Bitcoin, there's things like Chainlink, which is at 540%. We had Ethereum at 471%. Cardano did very well, 450%. Obviously, these returns are very different than what we're seeing in traditional markets, and they're very different what we're seeing certainly for gold or other commodities like silver or even real estate. Okay. So I gave you a couple of use cases. I'd like you to get a flavor for a couple of use cases here. So Bitcoin, of course, is primarily a store of value, like Jerome Powell, the Federal Reserve Chair in the US, indicated. It's a store of value. Transactions are not very fast, but can send to anyone, anywhere. And just like gold, you're not really concerned about sending it in seconds. You're more concerned that it preserves your value, right? Ethereum, it's used for platform distributed applications and smart contracts. A lot of projects use Ethereum. It's very popular, and it's the second highest market cap, and it has been used for ICOs and other things as well. We had Ripple, which is kind of the banking coin, right, by the banking industry. It's for cheaper, faster cross-border payments than the SWIFT network. And it's interesting. It's kind of a, I guess I call it a love-hate relationship with the regulators and the Ripple coin. Cardano, an alternative to Ethereum for smart contracts. They do a lot in Africa, very popular for financial inclusion projects, which I like for Africa developing markets. And we have a Monero. This is a privacy coin. It's designed to be untraceable, so governments really don't like this very much. There are other projects you've probably heard of, like the Binance coin. That's been going up in value really fast. It's #3 coin right now. Also, Facebook, they've been talking about their Libra, now their DM coin for some time. Not going to make a lot of comment on that, but they're working on their corporate coin. Okay. So we talked about the green light for banks to custody. This is a very big deal. It means that basically the regulators and the establishment in the US has basically bought into Bitcoin as a store of value, and cryptocurrencies, digital assets, and blockchain basically as a wave of the future, which I think is a smart move. Okay, let's look at African developing markets, which is something that is a separate use case or related but separate. Okay, so for the developing world, it's a little different. The developed world, it's like, okay, I've got this investment class. Maybe I'll buy some gold, some silver, some bonds, some Bitcoin. What am I going to do? In the developing world, though, much of the developed world already has easy access to banks, credit, finance. Not true in the developing world, right? In the developing world, blockchain and cryptocurrency represents the opportunity to access finance, because we have probably around 6 billion people around the world who are either unbanked or underbanked. Okay, in countries like Zimbabwe, where the currency completely lost value due to hyperinflation, Bitcoin will help you deal with a weak currency, right? So you can actually store your value there. And blockchain's transparency also helps to eliminate a lot of issues of potential corruption that you might see in the developing world that obviously a lot of people are concerned with doing financial transactions there. You can see this map just basically shows the unbanked or underbanked. So you'll see basically, except for kind of the richer Western nations, most of the world is either underbanked or unbanked. And Bitcoin really provides a solution and blockchain technology for financial inclusion for these markets that are not included in the richer Western nations. So my company, Auspicious Blockchain, Auspicious Agile and Blockchain, the problem that we solve is significant funding is not available for African diaspora founders and developing markets. How we help: we invest in African growth markets using blockchain platform, which we developed with our partners at ScanPay, and infrastructure to enable African diaspora and funding development. And we provide a third option besides Western aid from IMF or loans from China. We fund companies and projects, support the mission of building Africa in the growth markets, and we leverage our ScanPay platform, which is developed in the US and already operating there for money movement and enablement of enablement platform. So you can see our mission there is to facilitate the movement of funds into Africa and drive impactful investments, growth opportunities, and bring meaningful changes to the region, aim a better life for people in a brighter, stronger Africa, also Asia, Singapore, and developing markets. Okay, let's take a look at this video. Hopefully this will play okay for you guys to be able to hear it. This is Charlie. Charlie's an African American. Right. Can everybody hear? In the US, and he would like to be able to invest in Africa. Unfortunately, he doesn't know anybody there, and he really doesn't know how to go about it and how to safely and transparently invest funds or lend funds to projects in Africa. So a little confused as to what to do. But with our ScanPay platform from Auspicious Blockchain, we enable investments and funding and lending from Western financial system to projects in Africa let's take a look at how this works using our auspicious blockchain Scampay platform. So we start out with Charlie wanting to invest in a particular project. So he will go ahead and select the bank or financial institution in the US that he would like to be able to invest from. This would also work from Singapore and other locations around the world as well. And from there, he decides to exchange into some Bitcoin. He could do another cryptocurrency like the US dollar Tether or another, but he chooses to go to Bitcoin, well-known currency, and he moves that over and he creates in his Scampay wallet in the app a new debit card, which is going to be able to hold those funds for him. So he creates the new debit card, and you can see a list here of Charlie's debit card. So he is ready now to go ahead and look for a project that he wants to fund. So now Charlie's going to go through and look at a list of different African countries that he's interested that are available on the platform. And he sees Ghana, which is one he's heard a lot of good things about from the year of return last year in 2019. And so he chooses Ghana. And he goes to a list of projects in Ghana and he sees a couple available and maybe some others. So he picks one of those and he then goes ahead and funds along with others with crowdfunding. And he gives to a farming project that is happening in Ghana with Io and Ladi, who are local farmers. So he sends those funds over to Io and Ladi, and they are now able to produce a great output of produce and a good crop that they are able to now either return on investment or return on a loan back to Charlie through the platform. It goes back into his debit or credit account. They can use their account on the platform as well if they wish, and then that can go back to either a digital asset or cryptocurrency, or it can go back directly to his bank account in the US, all following existing payment mechanisms. Charlie's been able to help the African continent, and he's been able to invest and benefit himself. This is Charlie. Let's pause that. Charlie's an African
So
American.
this is our platform. We are in raising. Currently, we're in seed round raising. So for those we're a Singapore-based company. You'll find, we'll do our Q&A a little bit later, but my contact information is here. The Africa market, actually, we have information about the total addressable market. We're looking at probably being around a $6.6 billion probably company with a small, probably around 1% of the market in 2030. So there's a large amount of growth, as you're probably aware, in the African continent currently. At any rate, these are my contact details. I'll switch that to blockchain, my email, and social media, as well as the Wakanda Blockchain Meetup, which is an Africa-focused meetup event that we host virtually now, and our auspicious Agile Blockchain company site. So happy to answer any questions in the Q&A, and obviously about any of the topics we had here, as well as about our startup and the seed round that we're doing currently. Okay, great.
Thank you, John.
Mm-hmm.
Thank you very much for your presentation. Let us very quickly now invite our next speaker, Mr. Eugene Ng. Eugene is the head of business development for Gemini Asia Pacific, based in Singapore. He leads the business development and partnership efforts in the region, building out customized solutions for institutions and high net worth clients seeking a regulated and secure partner to allocate funds to digital assets. He started investing in cryptocurrencies in 2017 and has since advised multiple projects worldwide, helping to raise more than $50 million. Prior to his full-time career in crypto, Eugene had a decade of experience in institutional sales and trading in Citibank, Barclays, Capital, and Deutsche Bank. He was also the co-founder of ASEAN's first subscription-based drinking app. He has been featured on Bloomberg, Forbes, and Yahoo. Eugene graduated with a bachelor's degree in business management from SMU and a master's in finance from NYU Stern School of Business in New York City. Let me now invite Eugene to actually take over and present to us the topic.
Yeah, hi guys.
Yeah,
thank you for your time. I'm just going to zoom in, and I think it's such an interesting time to be all talking about cryptocurrencies. Is such a great time to be alive. It's really the dawn of age, right, for the digital world, and I think I'm really excited to share with my experience and what I've learned over the last couple of years in crypto. So Today, I think I'll touch on, trading cryptocurrencies with a new set of lens. And I think, the agenda, it's going to be really straightforward. Introduction to Gemini. Gemini is not a horoscope. It's I'll share more about, what Gemini, who we are, and the exchange and the custody landscape, and then follow on by, blockchain and on-chain data, and how do we use on-chain data for trading decisions, and Q&A. So Gemini is a full service platform for all things crypto, for institutional investors and retail investors alike. Gemini is focused in providing a single, elegant and secure on-ramp to the crypto economy. 50 plus countries globally, 7 fiat currencies supported, 10 fiat on-ramps, 33 cryptocurrencies available for trading and interest-bearing deposits, 48 cryptocurrencies available for custody, and 234 trading pairs available. Gemini is a regulated exchange and custody founded by Thailand Cameron Winklevoss in 2014. So if you guys have watched the movie Social Network, you would have found the name Winklevoss very familiar. These are my founders. And our mission is to bring crypto to the masses. And the way we build our business is really on 4 pillars of trust, and we want to build trust, and our brand is about being long-term and commitment to that. So licensing, compliance, security, and product, right? In terms of licensing, we are the first crypto company to be awarded the New York Trust license, which is a big deal, because what it means is we have to adhere to capital reserve requirements, cybersecurity, KYC, AML set forth under New York banking law. They're supervised under the NYSDFS. And with any jurisdictions that we are operating, we are we have the necessary licenses. For compliance, we have robust KYC, transactional monitoring, risk assessment, and whatnot. Security, we use the best and most secure HSMs. We have SOC 1, SOC 2, Type 1, Type 2, by Deloitte. We have an ISO 27001 certification, and we support FIDO too. Lastly, our product, it's a gamut in a wide spectrum of product. We have an exchange, we have a custody. We also operate the world's largest NFT gateway, which is a Nifty gateway. We also have a Gemini Earn, stablecoin called GUSD, credit card partnership with MasterCard, the first credit card to allow you to earn up to 3% in Bitcoin rewards, and a Gemini Fund Solutions platform. So the way I describe our platform is really an end-to-end solution. We have, and the Winklevoss twins, their vision is really to build the end-to-end solution. And what that means is really to allow our audience and our clients to really learn about cryptocurrency through Cryptopedia, right? And then once understanding, giving you guys the knowledge, then having that knowledge, you're able to then start trading. And while trading, you need to find a wallet to store that, and that's a custody. And with getting more comfortable, you can start earning, and then more importantly, using your crypto, whether is it the Gemini dollar or the credit card. So that's really an end-to-end solution, and that really puts us in a very different position versus our competitors and what some of the traditional players look like. So we are like a retail education hub. We are like an exchange and brokerage. We are like a custody. We're like a bank, and we're like a credit card issuer. So we are everything into one. So that's really the unique value proposition of Gemini. So let's go into what's more interesting. Let's change the custody landscape today. So I've just described this, so I'll just go on very quickly to the next slide. The centralized exchange landscapes, it's really 2 forms of exchanges, right? You have the centralized exchange and the decentralized exchange, and what that really means. So if you take a look on the right-hand side, you can see what it really means. Centralized is really a centrally controlled platform where users can trade your assets, right? So think of it going to SGX, going to NYSE to trade your stocks. That's a centralized exchange. Decentralized exchange is really a peer-to-peer sort of network, right? So you're going directly between users, right? So buying Tesla stocks from me, hypothetically, I sell my Tesla stocks to you, peer-to-peer. So that's decentralized exchange. And that's really a phenomenon that's really booming these days. There are multiple centralized exchanges, but there's one major difference is that there is a fiat on-ramp exchanges where typically you send your dollars or Sing dollars into exchange and buy crypto, and then you have pure crypto exchanges where they're non-fiat on-ramp, where you basically cannot deposit your dollars or Sing dollars to buy crypto. You can just trade crypto to crypto. So some examples of fiat on-ramp exchanges like Gemini, Coinbase, CoinHako, and then you have non-fiat on-ramp exchanges like Binance, Huobi, OKX, and whatnot. Decentralized exchanges are really interesting. I mean, it's really an interesting concept, and I'll just really go through the downside and what that really means to some of you guys. It may seem really cool, but let's go to the downside first. So downside is the scalability, right? The blockchain is able, it really depends on the transactions per second and how fast that works. So like for example, Ethereum has only like 15 TPS, right? And that's quite slow if you're trading a lot of transactions. I think user experience as well. I think DEXs are generally quite in terms of UX UI, they're not exactly as intuitive as some of the platforms that we're so comfortable with today. Liquidity as well, order books, that's something that is not necessarily very much mature. So it's something that is really a big question mark as well. And then the last thing is on and off ramp, where working with DEX is really the inability for you to get, dollars to buy crypto. That's something that's not really available yet. But what's cool about a decentralized exchange is DEXs are non-custodial, meaning to say that, traders do not have to relinquish control of their private keys, which is really cool if you think about it. Diversity as well. So what that means is you don't really have that, centralized exchanges exert a lot of control over the cryptocurrencies they list. DEX, on the other hand, is really, listing anyone with liquidity, right? So that's really cool. The other pro is that it's trustless transactions, right? So centralized exchange is really overseen by, an exchange, but DEX is really peer-to-peer, right? Sometimes most of the times they don't even have to do KYC. And then the other point that's really cool is lower fees. It's a lot cheaper to trade on DEX than, on a centralized exchange. Lastly, most importantly, is privacy, because there's not much of KYC. You don't have to divulge your information. So talking about the DEX and centralized exchanges, I think the next pertinent topic would be custody, right? When you buy an asset, where are you going to hold your assets? In the traditional market, when you buy a stock, right, Tesla, for example, it's typically is in your custodian, right? It's typically in a custody, like say BONY Mellon and whatnot. And most of the time, it's managed by the broker they're executing on with digital assets. Is a bit interesting because it's a digital barrel security. So when you buy it, you actually own it, like physical. So the concept of hot and cold storage then comes into play. Typically, a hot wallet, it means that it's connected to the internet, so it's therefore more easily accessible. A cold wallet is really offline storage. Is with the keys kept physically isolated with no connection to the internet, right? So there's really the way we view in Gemini, at least, there's a partial custody solution where it refers to a self-managed wallet that offers to a degree of third-party assistance in securing assets, and typically involves a simple two-step 2FA or multi-sig protection, while the third party possess a key to co-sign the transactions. A third-party custody is like Gemini, where you provide the highest level of security for digital assets. The solution is best for corporates and institutions. So there's really hot and cold. And when you dive deeper, there's also a way in which you look, is it a partial or is it a third-party custody? And this is really, a landscape of what the custodian solutions are in the market today. On the left-hand side, you have exchange-hosted wallets, right? So these are centralized exchanges where you buy your assets and you hold them. And most of these players that is in the exchange-hosted wallet, like Gemini has as well, with the exception of Coinbase, they do not have a proprietary custody infrastructure. And then you move on to like desktop, web-based, software wallets, mobile wallets, and then you have institutional grade custody. Then, going down to the middle, you have paper wallets, blockchain specific wallets, and then hardware wallets. There are pros and cons in using various wallet solutions, but at the end of the day, there's no perfect solution. It really depends on your your objectives, depends on the level of complexity, depends on the type of organization you are to really answer, what's, which wallet should you use. But, for the purposes of time, I'm not going to go through every single segment, but happy to take any questions in Q&A. So we go through, on-chain data. I think on-chain data is really interesting. And what is on-chain data, right? On-chain data is essentially data on the blockchain. That's as simple as it gets. It's something different because unlike in the data world, you have all these different servers where you keep your data, and you have all these different, places where you have to interact. But in blockchain, all these data are captured on the blockchain. So that's really what it means. Off-chain data is essentially data that's not captured on the blockchain. So that's really the two major concepts that I want to share. So I think one of the things that is important, and I took this from Art Invest, and Art Invest is fantastic. I strongly recommend you guys to check them out. They are very frontier when it comes to thinking about blockchain data. So I took this material from them. I'm going to share with you. Why study blockchain data, right? And I think more importantly, why Bitcoin data, right? So not all blockchains are created equally. You have what many people would call shitcoins, where it's probably means speculative in nature, but Bitcoin is really a very transparent and open blockchain. And the more open and more transparent a blockchain is, the easier the market participants can then analyze its underlying network fundamentals. And the most useful public blockchains are offer easy to access to audit their networks. So with Bitcoin, it's so cool because any individual can download a Bitcoin client, install a node, extract very interesting data with relatively low barriers of entry. All you need is just a computer with, internet, right? So I think the Bitcoin's auditability and openness and transparency is really driven by three factors. Bitcoin has a very simple accounting system, right? And it's really based on the UTXO accounting system, which tracks supply and monetary policy really simple. And then it has, the second point is that Bitcoin code is verifiable. It lives in it, right? So if you go back in time, you can see the data, right? From the birth of Bitcoin network. And lastly, Bitcoin nodes are efficient. So Bitcoin nodes or volunteer, computers can run the software and verify the network's integrity, right? Making it a lot more efficient than other networks. So I'll go on to, really share with you the high level, on-chain data, a new way of analyzing, right? There's three layers, and we go down from the bottom, right? Data, the layer one, right? Layer one is really to understand the network health, right? And I'll go through each layer throughout the presentation, and it's really to assess the integrity of the network, the security, and the usage. And layer two is really how do you then use those data to analyze buying and selling behavior? Are these guys actually holding their crypto, or are they selling? So really understanding of market behavior through data. The lastly is really for active managers, where you can look at valuation, and it's pretty interesting. So I'll go on to first, right? The first part, which is layer one. Layer one is really interesting. That's really the fundamentals of Bitcoin. And there's really three parts to the fundamental of Bitcoin. One is the monetary integrity. Second is the security. And third is the usage. When it comes to monetary, it's really about circulating supply and demand. And security is really hash rate and mining rate. Usage is really active addresses, transaction count, and volume. So monetary integrity, what does that mean, right? It's really think of it this way, right? It's versus a central bank where there isn't really much integrity there, where you can literally relentlessly print currencies at any time, at any point, you know, as long as you want. Bitcoin is predefined from the birth of Bitcoin, you know. So that's really cool. Like the software is programmed to basically have this circulating supply, you know, forever, and it's all predetermined already. And the issuance as well is all predetermined. So that's really cool, right? It adheres to rule-based monetary policies, which really highlights its integrity. And then network security. So how do you look at network security, right? It's really the hash rate. And hash rate, you know, in short, what it means is the computing power of the Bitcoin network. So the higher the hash rate, the stronger the network. So it's really interesting to understand that over the course of time, and hash rate has increased, and that's really a testimony to how unhackable the Bitcoin network is. So the next one is the very important usage. So because of transparency on network, you know, you're able to really monitor the activity and the number of active addresses. And that's really cool. You can see the number of unique addresses and how that has grown over 2010, right? That's massive. And then you actually can go dive into deeper, right? Like historically, addresses holding more than 10K Bitcoin has decreased over time, but addresses holding less than 10 Bitcoin has actually grown, especially since last year. So that can actually allow you to really understand the change of the market structure. And what about transactions? I think transactions is really cool. Since inception, Bitcoin has settled approximately 10 trillion in transactions, highlighting its ability to serve as a global settlement system. So a lot of people say, oh, Bitcoin is a store of value. Not really, right? If it can really settle so much transactions over, since inception, it's really, a form of payment. So I think that's something that is interesting, that you can really see that the velocity and transactions has really picked up. And I think that's really testimony to the network fundamentals. So I will now go to how to use on-chain data for trading decisions. Of course, the caveat here is, I'm not here to give you any investment, holding decisions, whether it's a buy and sell, but really tools for you to really look at, after this presentation. So there's some really interesting stuff that you can look at, like people look at network value, which is NVT. It's a parallel to P ratio, is really network value over daily USD volume transmitted over the blockchain. And then people also look at MVRV, which is market value to realized value ratio. It's really to indicate if, asset holders are in the profit or not. And then there's also other things like, realized cap, you could aggregate a last transaction of the price of UTXO. And then there's a variety of transactions, which I do not want to go into details, but, these are things which I'll share with you later on where you can get and learn more. And a lot of times, a lot of very sophisticated hedge funds, they actually use these algos and use these ratios to trade. So, plug it into APIs to different chain data, on-chain data, and even do their script where they can start, generating some sort of signal, whatever. Any of these matrices, points to a certain signal. So some of the very good places that I strongly recommend, like CryptoQuant and Glassnode, very good places for you to take a look. And then if you want to look at more technical theories and sort of momentum signal, you can look at woobu.com. I think that's really interesting. And then, if you want to learn the basics of different cryptocurrencies, I highly recommend Gemini's Cryptopedia. It's like the Wikipedia version of crypto. Okay, so, I just want to, in good spirits and in Gemini spirits, we always do this for our guests. Do scan the QR code, take 30 seconds at a time, answer 5 simple questions, I think. And, one lucky winner will walk away with $50 worth of swag. It comes with a t-shirt, mask and a carrier and some goodies. So I'll stay on this slide for 5 seconds so that you can scan the QR code. Yep, and I think we come to our Q&A. feel free to join, our Telegram channel. There's a QR code there. Please scan for latest updates. And Gemini here in Singapore, it's easy to sign up. Use your SingPass. It takes you less than 2 minutes. You can use Fast as a way to send money, and we're here to help. So any issues with your mobile app and all, there's support staff in Singapore. So we're here to help. And thank you for your time. Very excited to speak with you. And I hand on the time to Chris to continue with the Q&A.
Thank you, Eugene. Thanks for the speech. It's good that we have some goodies that Gemini is giving away as well. We do have some questions here. I will just go in the order of the question of when is actually being asked. So John, we do have, I believe this is a question that is relevant to your slides. So it's from Eddie To. Why a limit of 21 million and not a different number? Has it hit the limit yet? John, would you like to take that?
Sure. So Eddie, we mentioned the 21 million is in the code. A good place to look if you want to learn more about the Bitcoin core and the code. Andreas Antonopoulos has a book, Mastering Bitcoin. You can also look at the Bitcoin white paper, easy to find. And you'll find that there basically is a set amount that's going to be mined every single day through 2140, I believe is the last date. So until we hit that date in 2140, they're going to keep mining Bitcoin. We will not actually get to the point where we run out of all supply. Now, note, it's smaller and smaller amounts that are getting mined over time, which means that there's less available, so there is becoming more scarcity. However, it's in the code. Does that answer your question, Eddie?
Thank you, John. I think if there are more questions from Eddie, I'm quite sure that he will post. Now, let me kind of switch over to Eugene. Seems like there are a lot of questions related to Gemini platform, so I will just group two of these such questions together. So one question is from Stephen Singh. What are the key differences or advantages of using Gemini over the big names like Binance or Coinbase? He mentioned that he sees that most of your value proposition are kind of also available in Binance or Coinbase. The other relevant questions is by Mr. or Miss E. Look. What's the difference of Gemini platform and Gemini Singapore platform? So perhaps you want to take these two together, Eugene?
Yeah, I guess the key difference is that we are very regulated, right? If I don't like to really speak ill of my competitors, but if you look at the landscape, Gemini is a limited purpose trust in New York. I don't think Binance has. Coinbase has, I think, for the custody business only. We have it for both our exchange and custody. The other thing that's interesting to know that all the regulated North American ETFs for Bitcoin Ethereum, guess who they're using for custody? They're using Gemini, right? So that's a testimony to our level of credibility in terms of security, compliance, and our brand is about trust. We operate based on trust. We don't play by the same rules as with respect to some of our competitors. We are generally very conservative. We are very much we want to ensure that our users are accessing crypto in a very safe, regulated manner where they can feel very confident using our platform. So I think, in short, that's what we are. And I think the second differentiation is that we have a credit card that allows you to earn up to 3%. We have a Gemini Earn that allows you to earn interest on all the cryptocurrencies up to 7.5%. We have a Nifty Gateway where it's the largest NFT marketplace. So I don't think any of the competitors you mentioned have all this suite of services, and that's the reason why I say we are more complete, we are more full service than our competitors. And what's the difference? There's no difference in Gemini Singapore and the Gemini platform. You are still trading on a main order book, so there's no difference to that. Yeah.
Thanks, Eugene. Relevant to the platform again and Gemini, look, actually have a follow-up question about your small fine print in your deck, which I think he noticed. that you mentioned no license from MAS yet. So does any platform operates in Singapore that has obtained MAS license already?
No, not even. I'm not going to speak for other exchanges, but from what I know, is that nobody has gotten a license. We are actually exempted. So what it means is that we are exempted from MAS. We have already applied. So everybody who's operating a cryptocurrency exchange who have already applied last year would have been exempted, but nobody has been granted. So that's to answer your question, at least in my opinion. Yep.
Okay, moving on to more theoretical stuff. I think Hussein asked a question about what are the sources of this cryptocurrency? Is it possible for a high number of a certain crypto being mined and thus devaluing it? I think that question can be, either John or Eugene. Feel
Maybe
free
I'll
to
take
take
a
it.
shot first, and then I'll pass it to Eugene. So the value of crypto, I guess much like the value of fiat currency, honestly, right? It's kind of in what people believe it to be worth. It's not based on, there's not like a set valuation mechanism for cryptocurrency at the moment, right? So your crypto is worth what people say, well, now I feel that, a lot of institutional adoption for Bitcoin, I see there's limited supply, price goes up. But Ethereum, which is the number 2 coin, Ethereum does not have a cap right now, anyway. They're talking about kind of starting to set like a devaluation, or deflationary for their coin. But that's also going up in value because it's used in smart contracts. It's used by many projects. And then you have Dogecoin, right? Dogecoin is it was supposed to be a joke. It's a meme coin. You hear a lot from Elon Musk about it. I think Mark Cuban talks about it. And I don't know where it is right now. I think it's like 30 cents or something, up from like 5 cents. But the valuations of cryptocurrencies are not just based on the amount that are out there in the ecosystem. They're based on the use case and the perceived value, right?
Good. Thanks, John. Eugene, you have anything else to add?
I think for the way I answer that question is the sources is really, it really depends on the creation of and this is this is going to take a long time to answer, but in short, it really depends on the underlying narrative of the token. Is it a security? Is it a utility? What's the real function of the token? And then we can understand the sources and how that's been mined, right? So some tokens are pre-mined, some tokens are not pre-mined, and there's a variety of tokens. So I don't really know where to begin if we go into this discussion, but I can only say that the value is really I think, in my opinion, it is not something that we can use the discounted cash flow and try to value that. It really depends on, like I say, the underlying function of the token. If the token is like a Bitcoin, then we can start using some commodity pricing like flow to stock model, which was mentioned earlier. And if it's more like a securitized token, like say tokenizing a real estate, you can start using maybe a DCF model. So I think, to answer your question, is blockchain, take a step back. Blockchain intersects through different sectors of the economy. That makes it really interesting. And that's why the way we evaluate should also be different for different types of tokens.
Thank you, Eugene. Let me now actually go into some of the market dynamics. So some questions around what is the reason when there's a crash in cryptos, the spread between buying and selling become much bigger as compared to normal times? So Eugene or John, you want to just...
Sorry, what's the exact question on that one, Chris?
When there's a crash in cryptocurrencies, the spread between buying and selling become much bigger as compared to normal times. Yes.
Yeah. So it is a very I guess what's the word we want to use here? There's a lot of movement in the market, right? So some people like to call it very speculative. It's become maybe a little bit less so. But the bottom line is there's a good deal of arbitrage opportunities if you're a trader, right? So you can make a lot of money on movements of the market. I'm not a trader personally, so as I see, Chris back at GIC, right? I'm a long-term investor personally. I don't day trade on this. There are a lot of people who can tell you a lot better kind of the market movements day to day. and the volatility. It's what I'm looking for, the fluctuations. So yes, there's going to be a lot of volatility. We talked about the stock to flow and the overall trend for Bitcoin. And I think there was another question. I don't want to jump the gun on that one, but about it being an asset versus being kind of a currency. And it really is an asset, right? So it's really a question of the valuation of that asset. So if you want to trade, absolutely great arbitrage opportunities. You can probably even make bigger spreads in the altcoins, things like, a Dogecoin or a Cardano or a Stellar or some of the lower coins. But you got to know your project, because if you don't know that project, obviously the volatility could really get you, right? Because these things go up and down 25, 50%, sometimes in a day, depending, especially some of the altcoin projects that are lower ranked in the markets. So be careful on that, but certainly there's lots of arbitrage opportunities for traders. I'm not sure if I've answered your question.
Yeah, I think Elok, who asked the question, I think kind of highlight that he's referring to platform spread. So platform, I think in this case, Eugene, any view from a Gemini standpoint in terms of the
I think platform spread is a question in which, like the interesting thing about crypto is a fragmented exchange marketplace. You have not just one NYSE, not one LSE, one SGX. You have 1,000 or more crypto exchanges, right? So that creates I think one, a fragmentation of markets, and second, it also involves and creates the arbitrage activity, which ideally hopes to create a balancing force for prices to converge to what fair market price is. So to answer your question, I mean, it's like, if, for example, if you are buying a rice from Thailand and you're selling rice in India, the forces of market demands will push that into the fair value price, right? So I think it's similar to commodities trading, to what, buying crypto in one exchange is in another exchange. So that's how I explain, platform spread and how that differs. So if you do see that Gemini is cheap, yeah, you should be buying, your crypto here in Gemini.
And maybe I'll add one thing to that, because I think you can make a good point. There's geographic distribution of prices as well. So we have, like, in the market we call the kimchi premium. In Korea, there was a much higher price on Bitcoin for quite some time. Nigeria actually had a ban for some time, and their price when Bitcoin was sitting around 50,000, it was like 70-something thousand in Nigeria because of that. So there's definitely a geographic spread that you're going to see in terms of pricing.
Thanks, John. I think in the interest of time, we are already 3 minutes past 5. But since there's such excitement, I thought we just have another go for two last two questions. One is by Hari Haran. What is the future of crypto if US regulations apply more restriction? Is there a future?
So maybe I'll touch on that. I'm sure that you
go ahead
on that too. I think that, obviously I'm American myself, right? So I'm watching our markets very carefully back home. There has been so much institutional adoption at this point. It's integrated into Wall Street. It's integrated into banks. It's integrated into corporate treasuries. It's integrated into payment platforms. There is likely going to be regulation. I mean, you're not going to escape that. It's going to happen. It's going to be there. I think, in fact, Gemini is one of the most well-regulated platforms out there, as far as I know. You guys are pretty well known for that. But the bottom line is, yes, absolutely, it's going to be regulated. Is that going to be a catastrophic thing? I think it's a small likelihood of that being catastrophic. I think it's more likely that, just like traditional financial institutions are regulated, you're going to see more regulation in the US along those lines for the cryptocurrency space.
Thanks, John. Eugene, anything to add? Okay. I think the last question are wallet related, right? A quite interesting question as well. So I think someone asked about, if you buy Bitcoin for a small amount, how this is stopped from a person who purchased. And John, there's one person that asked that what happened to the holder of the wallet if he passed away? How can that be passed to the next of kin?
Okay. I guess I'll touch on the if the holder of the wallet passes away, you probably aren't going to be able to access it unless there was somebody else who also had access to those keys, right? So the private key is something the holder is going to have. Either it can be done through a mnemonic phrase, or there is an actual kind of key, which is an alphanumeric key, right? So that's usually incorporated into your wallet. So let's say you share that with somebody else, or you have this kind of, we call them two person keys or whatever, I forget how to name it. There would be somebody else who might be able to access it, but that would have to be somebody that the holder wallet had shared it with, hopefully previous to their passing. Hopefully it doesn't happen. So it is very individualized in that the private keys are yours and you become your own bank. So the good news is you have control over your own funds. The bad news is you have complete control over your own funds.
Jane, anything to add?
I think Gemini is a solution. So we have a custody solution, and one of the solutions that we have for this incident is you can actually add users to your custody account. So if in a scenario that something happens to you, you can retrieve your assets. So that's the reason why I strongly recommend third-party custody solutions, because you don't have to have the hassle of really managing your own private keys, and you have a qualified custody like Gemini to help do that for you.
So maybe I'll make one more comment on that, Chris. Being an American, I kind of have to. So we went through the Great Recession in America back in 2008, right? Where we actually couldn't access our bank accounts. We couldn't access, retirement instruments. We couldn't access, certain things. Mortgages were going upside down. That's actually what was the birth of Bitcoin, because I guess a lot of people were very uncomfortable that we couldn't access it. I think the custody is fine, third-party custody. I don't really have an issue with it per se. But at the same time, you got to know that in crypto, there's a saying that says not your keys, not your crypto, which means that if there is, Lord forbid, a catastrophic, a black swan event, you may not be able to access that custody if for some reason something happened like 2008.
Thank you. Thank you, John and Eugene, for the insights. I think we can't overrun by 7 minutes. That truly shows the kind of interest in this space.